Imagine a life where your income keeps flowing month after month, even while you sleep. That's the incredible power of passive income from real estate investing. No more trading your precious time for money. Instead, let your investment properties do the work for you. So many people dream of financial freedom, but only a few take the leap and make it happen. Will you be one of them? In this video, we're going to guide you step by step through the real estate investing strategies that can truly change your life. Understanding the basics. When we mention real estate investing, we are not talking about flipping houses or wholesaling deals. Those are active investment strategies requiring constant work. Instead, we're focusing on buy and hold real estate, purchasing properties and renting them out to tenants. The pure beauty of this approach is that each month, your tenants are paying down your mortgage for you. As the years go by, the mortgages get paid off, and those rental income streams become pure profit pouring into your pockets. By following the proven path we shall outline, you could potentially own multiple rental properties paid off in full within 15 to 30 years. At that point, you're the one calling the shots on how to spend your time without money worries holding you back. Sound like a dream? It's closer than you think. Step 1. Build your credit score. Your credit score is the key that unlocks affordable real estate investment loans. Lenders want to see a strong credit history of responsible borrowing before taking a risk on you. With a high credit score, you'll qualify for the lowest interest rates possible, allowing you to maximize your cash flow on each property. On the flip side, a poor credit score either blocks you from borrowing completely or sticks you with outrageously high interest that eats into your profits. Prioritize building your credit right now by making payments on time, keeping balances low, and checking your credit reports. Developing this critical foundation enables your investing journey from the very start. Step 2. Save, save, save. Since lenders typically require 5 to 20% down payments on investment properties, you'll need to diligently save up a substantial cash reserve before getting started. The more you can put down upfront, the easier it becomes to cash flow immediately. But saving money is often easier said than done in today's world of tempting consumption. Our advice: live frugally and bank as much of your income as possible, whether from a 9-to-5 job, self-employment side hustles, or other creative means. The delayed gratification of saying no to frivolous spending today puts you on the fast track to freedom tomorrow. Stay focused and watch your real estate down payment fund grow. Step 3. Show proof of income. Once you have that down payment saved up, the next hurdle is proving to lenders that you have enough stable income to make the monthly mortgage payments. They'll closely review your tax returns from 1 to 2 years to assess your qualifications. For self-employed folks like ourselves, they average out those 1 to 2 recent years of net income after deductions. W-2 employees typically just need to document 1 year of employment income along with recent pay stubs. The bottom line: lenders need to see that you have a reliable, consistent income source before giving you the investment property loan approval. No games, no gimmicks, just financial responsibility. Step 4. Get pre-qualified. With your credit in order, a stockpile of cash saved, and provable income, you're now perfectly positioned to get pre-qualified for a loan with multiple banks and lenders. We cannot stress enough how important this pre-approval step is. By doing it upfront, you'll know your firm budget for purchase and won't waste time looking at properties outside your preset price range. Talk about frustrating. Those pre-qualified numbers also give you legitimacy when making offers. Even better, once you find a property worth pursuing, your lender has already verified your qualifications instead of scrambling last minute. Smooth, effortless transactions make the whole process feel easy. Step 5. Research the market. With your pre-approvals lined up, it's now time for the fun part: scouring the real estate market for those undervalued investment gems. We recommend focusing your property hunt on up-and-coming areas situated just outside of higher-priced neighborhoods. Look for communities with increasing development, new businesses opening, fresh infrastructure upgrades, and other signs of imminent growth and desirability. These areas poised for appreciation set you up to capture healthy equity gains down the road. Beyond just driving around neighborhoods, attend as many open houses as possible to get an intuitive feel for home values and what constitutes a good deal. Seeing dozens of properties builds up your comparative pricing analysis skills like muscle memory. Step 6. Make offers. Once you find a strong investment candidate that meets your criteria, it's time to make an offer. Craft a purchase proposal that is fair, but favors you, the buyer, in terms of price and contingencies. Don't get emotionally drawn into bidding war craziness. Have the patience and discipline to walk away from deals that just don't make financial sense, no matter how enticing the home may be. There are always more properties coming on the market. On the flip side, don't be irrationally stubborn either. If a home ticks every other box and only slightly exceeds your budget, it can be worthwhile stretching a bit to secure that perfect investment. The key is running realistic numbers to analyze cash flow, expenses, and long-term profit projections. Step 7. Inspections and renovations. Once you're under contract, it's time to thoroughly investigate the property's condition through inspections. Hire professionals to assess every aspect: structural, mechanical, pests, hazards, and more. Their findings could uncover issues to renegotiate the purchase price. Most homes need some level of renovations before generating maximum rent rates anyway. Again, hire reliable contractors to provide realistic cost estimates on needed upgrades and repairs. Compare multiple bids to understand fair pricing. With those inspection reports and line-item renovation budgets, you can prioritize the highest impact projects for your initial investment. Smart, targeted value-add improvements set you up to charge premium rents from day one. Step 8. Finding tenants. Drum roll, please. After closing on your investment property and completing renovations, it's time for the real fun part: finding those all-important tenants to make your cash flow machine operational. We have found Craigslist to be an amazingly effective and free online marketing platform for rental listings. Follow proven listing strategies to attract high-quality tenant leads. Then, implement thorough screening practices to find long-term, low-maintenance renters. With responsible tenants in place, you can kick back and let the rent payments roll in month after month. Each payment builds up another layer of forced equity as those mortgages get paid down. Step 9. Enjoy the passive income. As the power of real estate investing starts compounding from that first rental, it's only natural to seek out more properties to accelerate your passive income streams. Replicate the same process over and over and over. With each new investment comes more mortgage pay down, more equity capture, more rental profit, and more freedom bit by bit. What initially felt like a slow journey picks up extraordinary momentum. And that right there is the incredible power of patient perseverance as a real estate entrepreneur. In just 15 to 30 years, you can own a full portfolio of rental properties throwing off perpetual income. Once obligations from life are covered, you'll finally control your time and energy however you please. That's the ultimate dream of financial independence through passive income, and why real estate investing deserves serious consideration. It may require upfront effort and short-term financial discipline, but the long-term benefits of real estate pay rental checks for generations. If you're ready to escape the limitations of trading time for money and build lasting wealth, start implementing these real estate investment strategies today. It's never too late to begin compounding that passive income. If you found value in this guide, we would appreciate a like on the video. It lets us know you're finding this content helpful. Go ahead and subscribe while you're at it so you never miss future real estate investing deep dives. And of course, feel free to share this video with any friends or family seeking alternative income strategies. The path is cleared. Your real estate investing journey awaits. Let's get started building those cash flow streams together. We shall see you next time.